Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 10th, and we just got a couple economic news releases to share with you today. The first one is NFIB Small Business. This is basically an index that kind of gives us the confidence level for small businesses, which is important primarily because small businesses do represent the majority of the jobs out there in the U.S. here. So if they're feeling confident, they're going to be hiring more people, and that's good for our economy here. Our previous reporting back in November was a 98.4, which was a good number, but it jumped all the way up to 105.8 in the month of December. So that's obviously a good sign if they're feeling pretty confident. We haven't been this number in quite some time here, which is obviously a very good thing for us, that things are moving, or seem to be getting off to a good start here, especially coming to the new year here. Job openings kind of remain the same here at 5.5 million. Previously it was at 5.5, and again, continued at 5.5 million. Wholesale inventories improved, so we had a pullback of 0.1% back in October, and November went up 1%. So they're obviously seeing that businesses picking up, so they're gearing up to be able to sell to businesses and such. So this is obviously a good report here as well. Stock markets start off a little bit down today. They're kind of, again, they've shot up so much that they're kind of gearing up a little bit as to reevaluating if those stocks are really worth the value they're at. So they are up a little bit. You're going to see, we'll touch on that right here, earnings reports beginning Friday. So what you're going to see here, because they've shot up so much, more on optimism versus really the fundamentals. Now they're going to look at the fundamentals. What are these stocks or these companies, corporations going to be coming out with on their reports? Are they going to come out, if they come in overwhelming, then you might see the Dow hit that 20,000 mark. If they come in underwhelming, you may see the stock market pull back a bit. Those are going to be really important. Now, the first ones that are going to be coming up are going to be banks, and right now they're going to be favored to be doing much better, primarily because of talk of deregulation by the Trump administration. That's one reason why the banks were one of the first things that are really kind of taking off in terms of for stocks here. And then on top of it, Trump is supposed to have a speech tomorrow, which could obviously affect things as to what he says. And of course, all investors will be listening as he gets ready to get inaugurated next week. And then another note that came out was China reported a little bit higher PPI or wholesale inflation coming out of China. So it came in a little higher than expected over there. So today, the bond market, here's what we look at. Now, as a result of the Chinese wholesale inflation, because bonds don't like inflation, we did start off much lower this morning here. Right now, we're currently about 3 basis points higher than where we left off yesterday. So we rose up a bit. That concerns me a little bit that we were a little bit lower, because we obviously don't want to see a trend going downwards. Even though we're up right here, this could lead to a trend to a downward level here. Now, as you can see here, we got the 10-day moving average up here, and now we got a 50-day moving average here. At some point, they're going to cross and meet here, and we're going to be squeezed to go either up or down. Now, as we mentioned, the corporate earnings reports are going to really what's going to drive this. So, if corporate earnings reports come in pretty heavy, strong, then obviously it's going to push the bond market even lower, and all that money is going to go into the stock market, which will create interest rates rising a bit further. Now, if they come in underwhelming because they've driven so far, they're going to figure, okay, the stocks aren't worth as much as they're overvaluing those stocks. The bond market could get a little bit more of a rally, so to speak. So keep an eye on that. Starting Friday is when we're supposed to start getting the first reports of those corporate earnings and stuff. So anyways, if you guys want to get more updates throughout the day, I do post on Twitter. You can find me at Mike Bjork on Twitter, and get your updates throughout the day here. All right, folks, you guys have a great day. We'll look forward to see you guys tomorrow, and thanks for watching. Bye-bye.